The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome from 100 South Broad Street, Philadelphia, Pennsylvania, the city of brotherly love. And we have brotherly love working in the Treasury bond market today, boys and girls. It's on a run. We're almost a full point, and it looks like we got a little bit further to go before we run into any resistance at all. However, the first thing I wanted to cover was the response on the Revelation of the Pyramid video that I sent out. I'd never had a response like that before. Well over 100 people sent it to me for a request. I got, some feedback on it. The thing to remember, folks, the prediction stuff, there was a tiny bit of that. But that is not what's important. The last 30 minutes of the video was related to the true mathematics and the geography, of the pyramids. And that's what I thought was incredibly interesting, how everything was related to pi and phi, the golden ratio. So that's what was really amazing. What you folks didn't grasp is that I had spent 3 days of this. This was given to be my guest before I left to share with you folks, but we had, not me, but he had dissected a lot of these things, proving the things that were in this. He just didn't take it at face value, and in his journey to prove some of these things, he found some things that were just really even more amazing. In fact, if you were to take the pyramid and cut it open and lay it flat, what you would be looking at was nothing less than amazing. And turning it either north, south, east, and west, it turns into a compass that shows things that are just totally, that's just beyond belief. But they can't make any money off of that, and that's what we're here for. But it certainly is interesting and very, very educational. And but that's the key to look at, folks. We've got a big ABCD. Let's get to the main thing first. I had a question about the price of Target, and as you can see, my good friend Jim Bartolioni has shared with this long-term log chart on Target, and as you see, it looks like it's become another arrow in the quiver of Jeff Bezos, because this thing has broken a 40-year trend line on log paper, which means the trend is moving down rather rapidly. And also the fact that if you look at that chart really closely, you can easily identify a 3 drive to a top pattern. And so we have reached some really strong areas where Target is going to have some serious trouble. And if Target's having serious trouble, Walmart's got really serious trouble. So that's the key thing. The one I'm going to cover today, the first thing I wanted to mention to you, we've got some things happening that are going to be interesting. And one of them is the fact that we have a potential, not a potential, but we do have a really good ABCD pattern forming in the E-mini S&P, and I wanted to bring this up to you and show it to you because it comes in very close to where we are. There we go. It's a little bit better than I did before. Give me a second and we'll put this up. You'll see here that yesterday we rallied back to almost a perfect 786. We missed it by 1 point, and now we're coming down to the area of 2082 to 2081, which we should find some strong support. Now, if this is really strong bull market, this thing should stay above the 2080 level. That's what it looks like from the cheap seats here in, it's not Tucson anymore, it's Philadelphia. So that's about it. Okay. still recovering from the trip, folks. Boy, I really put in a lot of hours and a lot of time and a lot of travel. 13 days nonstop, and at my age, I shouldn't do that stuff, and I won't do it anymore. But it was a chance to meet some really nice old friends, and that was worth every bit of the trouble. And so it turned out to be okay. But watch this S&P here at the 2082 level. Because we get below 2075, there's trouble in River City. Because that high that we made, was up against a lot of resistance. And as we mentioned, the New York Stock Exchange Index did not violate one single thing as far as a bear market. We'll pull this up, and you'll see that that thing looks a lot different, than the Dow Jones chart or the NASDAQ chart or the S&P chart. So the real market is going back doing its own thing again. So that's the key method or message of the day. So that's what we want to be looking at, and then we will move on to what I think, folks. I'm going to try to show you by charts. Now, remember, I'm not a fundamentalist, and I know the guy from Goldman Sachs was on today, and he was talking about the market and the fact that we were looking at a big move in crude oil. He thought there could be some supply up here. But as you know, the Goldman Sachs had a recommendation to buy crude. But if you look at this, you'll notice that we've completed a Gartley pattern going back to last April. We made the 61% retracement. That came in at around 50 flat, and we hit 50.40 per barrel. That's the main thing to look at. Now, what I'm going to try to do is to walk you through the total complex. That's what I think the best thing to do. And the next one I want to show you is the main stock of the oil group, and that's one of the second largest held stock in the world after Apple, and that is ExxonMobil. And as you can see, I don't know if that Apple is still correct since the big sell-off. I'd have to double check that. But as you can see, we made a 61% retracement in ExxonMobil from the high in 2014, and also a 786 retracement from the high in 2014. They both came in just a little below $90, and we're trading, roughly just a tad below 89 this morning. So the next one we want to look at, of course, is the gasoline futures. We looked at these last week, and we pointed out, the three drive to a top pattern, and that also has indicated that, we have reached some type of a resistance area in gasoline and also in the crude oil, indicating that we're in a corrective mode. Now, this might be a corrective mode in a long-term bear market, or this might be a corrective mode only taking us down, 10-15% sell-off into the next 61% retracement in oil. This we don't know. We have to give it a little bit of time. But any close above $52 a barrel is telling you that this whole thing that I'm going through this morning is bogus. And we don't like bogus here, because standing on the other side of bogus is not a good thing. All right, the next one, we got two more to go. And then we're going to put this up, and we will see. This is the heating oil. And again, you see a 38% retracement from the high pretty much, and a 78 from a previous level. And when we do from a break, we'll come back and look at natural gas.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, I've had a couple of requests from the den here about this video on the pyramids. Just send the request to larrypesavento@gmail.com, and that's going to be that'll be the easiest way. All I do is paste it in, and you'll see what's happening. It has some things about I can see where what's his name, Al Gore, got his ideas on global warming and stuff. But those things, you're talking about a planet that's 5 billion years old, and to get the exact date. We've got the exact date figured out, and I'm going to share it to you folks. This is the exact date for the end of the world. Okay, write this down, because this is how much time you got left. It's April 1st, 2023 at 10 o'clock in the morning. That's it. And then it's over. So plan your lives around that, and I think you'll be just fine. And remember that date, April 1st of the year 2023, and of course focusing on the April 1st part of that. Okay, on to the next thing. Let's look at some of these other markets. We just went over the crude oil market, the gasoline, and also the last one I wanted to mention, also energy related, is the gasoline futures that we've had a really big move in off of the low that we had at the 3 drive to a bottom pattern that occurred, way back in March. It was nearly perfectly symmetrical in time and price, which is like you see, we've been in a really good uptrend here, and we hit the 78% retracement of that whole move down from January yesterday, and so we're expecting a little sell-off here in the natural gas today. I haven't seen if it started to do that yet or not, but that's what we're looking at. Yes, you done broke the code, Russell, you sly fox. It is April Fool's Day, son of a gun. I can't put anything over on you guys. Shut the front door and raise the rent. Okay, let's move on to the next one that we want to talk about. we want to look at a question that someone had about our greatest stock in the world, the one that controls the world, and that is Apple. And we want to take a look at Apple here on a interesting chart. What I've done here with Apple is I've measured. You can see starting in October of last year, or 2014, we had a big ABCD pattern that said the market should get up there somewhere around the 132 level. The high was 134. Since July of last year, when it lost its luster, when we had a 3 drive to a top, well, that wasn't 3 drive, it was a head and shoulders pattern in Apple, but it was very symmetrical. And then we had the ABCD pattern that measures to $82 a share. And then you'll see the other two ABCD patterns that are there. One measures to $82 a share. And this last one, if we don't get above 103, which is the 61% retracement in the Apple off this last low, that one also goes down to about 82, 83. So that's where I think Apple is headed, to that 82, 83 level. Now, whether that's going to be the case or not, I don't know, but this is the pattern that we're looking at. Should we get Apple above 110, that is totally wrong. So Apple's moved 10% up. This is going to be wrong, and you got to move on and do something else, because it's just no way that it'll work if it gets above that level. But Apple should have stiff resistance up at that 102 level. That's a 61% retracement, off of the April highs. I had a couple of folks, send me questions after the pyramid thing was over, and asking me, how this related to trading. And all it relates to trading, folks, is the numbers that we look at on these patterns, because we're only looking at right angles. We're looking at high, low, high, low, high, low, and they're all related to these numbers. The hypotenuse of those triangles are related to the Fibonacci numbers in square roots, either 1.414, 1.27 or 1.618. And when the market reacts, we look for the first reaction is usually around 38%. We look at 61.8 and 78.6, and then the expansions are 127 and 1.618. We try to put them together in a simple way, and the emphasis here is totally on simple. That's the key. Now, I've had one request I've had one, so I want to be able to follow it through, and they've asked for the picture that I have behind my desk. It's a big oil painting. It's a 4x4. It was done by a very famous artist in California for me in 1977. These were the patterns that I've looked at over the years. This was long before I actually wrote my first paper on Gartley in 1975. This painting was done for me, I believe, in 77 in January. I think it was Christmas of 76 is when I got it. But on my desk, we were selling Cougarans at the time, and maple leaves, gold coins, and I used to have them stacked there because my secretary would have to take them and deliver them. And I also had, my ruler, and I had a proportional divider. It's shown as a compass here because the gentleman, the husband of the artist, explained to her what it was, and she thought it was a compass, but actually it was a proportional divider. But it shows the rules that I had put up there. I had them on two 8.5 by 11 sheets of paper, and she made it into a book format. And of course, I had the saying, "He who knows not what he risks all." I got that from my good friend and mentor, John Hill, who we've had on the floor on the program before, from Futures Truth. And then these other patterns were ones that I got out of the book that that I was very, very interested in. I didn't put, of course, I didn't have butterflies at that time. I had 3 drive, of course, but these were my day trading patterns, that I looked at. And we certainly have enjoyed using those over the years. But this is what the painting looks like. And so that's all I wanted to mention about that. If you want a copy of this, all you have to do is ask, and I will send it out. I hope I don't get 100, but Nope, my license plates. Yeah, my license plates on my car have been the same for 25 years, Duffy. In Arizona, because we've only got about 10 million people, everything related to geometry and Fibonacci is taken. There's not one sequence of numbers in geometry or Fibonacci that hasn't been taken. I tried everything. And my good friend, Dr. Jimmy Elder out of Birmingham, he was the second student that I ever taught. When I moved to Arizona in '94, I just bought a new car, and I wanted to get customized license plates. And he was with me when I had to go to the DMV, and we couldn't find anything. And he said, why don't you use no risk? He said, you're always harping about risk. Why don't you do that? And so I got my license plates as no risk. And about 2 days later, they come very quickly because our prisons are full of making license plates in Arizona. And we put the license plates on the car, and we were down by the Air Force Base gassing up. And I was putting gas in the car. That's what you do when you gas up. And there was this young teeny bopper from the University of Arizona with her shorts on and her little midriff. And she said, what does that mean, no risk on your license plates? And Jimmy and I were standing there, and I said, well, I work out at the Air Force Base, and I teach the top 10 gun pilots how to eject from the F-16s. And she said, oh, let's go out and have a drink. And I thought Jimmy was going to swallow his tongue. Got to go back to work. We got to pay some bills. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and Mr. Z in the room has informed us that the natural gas has really taken off. It's jumped way above the 786, which should have had some pretty stiff resistance there at 228. I guess it's gotten all the way up to the 242 level. So that's and it looks like it's headed towards 249, Mr. Z. You certainly have that one pegged right. So we'll keep an eye on that as we walk through some of these other charts that we're looking at this morning. The interesting one that we're looking at yesterday and today in the foreign exchange, of course, is the euro. We've gone here and we've stopped at the 61% retracement at that 111.20 area. We've been there for 6 days now, which means we might get a little bit of a rally here in the euro, but long term, it certainly has some work to do. What's interesting about this euro chart, if you like symmetry, and I like symmetry, if you look at the period between February and March, that's exactly equal to what we're looking at here between early May and where we are right now. It's taken almost the same amount of time to get there, and the distance is exactly the same, and it happens to be a perfect 61% retracement. The golden mean at that 111.25 level, and it's also a 50% retracement from the low at the end of last year at when we were down at that 105 and change level, which was also a big three drive pattern to the downside at 105. So the euro is in a spot where it should get a little bit more of a rally. It's very oversold on a daily basis, and we could easily rally up to that 113, 114 level and still be, relatively bearish. We'll take a look here at the opening this morning. We got a little bit of action to the downside, of course, as we expected. Remember, the number to look at is the 2082 area. That's an ABCD pattern that we posted in the Dan early this morning in the ES. It's got a lot of symmetry. And that's basically it, and that's pretty much the way we're watching it. One of the emails that I got after sending the video out on the revelation of the pyramids was the question is whether I really do not look at any fundamentals or not. And folks, trust me on this one. This is a no-brainer for me because I have an MBA in finance and marketing. And believe me when I tell you that I've looked at all kinds of economic models. I've seen supply-demand statistics. I've counted beans. I've counted barrels of oil and soybean oil. And believe me, I have never found anything better than the patterns. The patterns are basically telling you whether there's more buyers or sellers. And that's really, what you're looking at. And I don't see anything different than that. Another email, I write these email questions down so that we can cover some of these things, but one of the questions was about the gold market because we were looking for gold to get down to that 1190 level. We did get down to 1199 on Sunday night. Since that time, we've rallied $23 a barrel. We got up to, and it's taken 3 days to do that. Which is very bullish itself. And silver's down there hovering at the 61% retracement level of the big move, and that comes in at $16.01 per ounce. So I think we've got a little bit more to go to the downside. My assumption is that we're going to be looking at something really big happening in all these markets based on those dates that we have from geometry that come in on the 20th to 23rd. And then also we have them really large, the largest of the whole year, coming in at the 28th through the 30th of June. That's the really, really big one. And believe me, folks, when I tell you, I keep saying this because it's a little hard for me to Oh, I'll tell you what it's doing without showing you, and I just can't show you, but I can tell you, and that is the numbers are they relate to exactly what happened in 1974 when we made our bottoms in October and December. And let me walk you through that. From 1974, the market went up and finally made a new high into I think it was 1981, and then we came down really hard into August the 9th of 1982, and that move was 61% of that low from 1974, the December low. There were double low in October and December. Both of those were 5-planet conjunctions and oppositions on both of those days in October and December. From 1982, we went up to 1987 into October the 25th when we topped with harmonic convergence with 5 major planets in the sign of Leo on the 25th of August of 1987. And then we had the crash 6 weeks later into October the 19th. The market bottomed the next day with a slightly lower low, and that low was exactly to the tick of a 61% retracement of the low from August the 9th of 1982. Now, buckle up, boys and girls, because the next one is going to really knock your proverbial geometric socks off, and that is, if you'll remember, on May the 5th of 2009, when all the banks were ready to fail, the Dow was trading at 16,666, and that number was exactly, yes, boys and girls, you guessed it, 61.8% from the low of 1987 to the tick. I mean, hundreds of decimal points. So if you don't believe in numbers, it's your own fault. They don't always work, but sometimes they do. And when they do, we have to tell the folks that this is what we think is, really happening. So we'll see. Well, we've gotten close to the 2082 level. We're trading at 2083.75. We may not make it, but who knows? It's close enough. We'll watch it if it's going to do it, and we'll go from that level. Okay. Crude oil is, heading to the downside so far. We're down now about 6% from the high. This is interesting because when I was giving my talk in Kiev on the 22nd and 21st and 22nd, the thing that I mentioned, they asked for a trade, and I said, sell crude oil at $50 a barrel. If it goes to 51, you're wrong. And so far, that's working, but, sometimes they work, sometimes they don't. Who knows? We'll wait and see. But, it's being fulfilled by the gasoline and also the heating oil also. Now, natural gas, which is not a byproduct of those, by the way, is going, rocketing up. So, trade what you see, not what you talk about. That's for sure. All right, let's go to the bond market. We've got a pretty big, I posted the chart of TLT in the room here for let you see that thing has started to roll over. That means that we should be looking at higher bond prices. Bonds, by the way, started up on August the 9th, also of 1982, and have been in a 34-year bull market. Actually 33 years because they topped earlier this year, it's my opinion, so we'll see. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we were talking about the Treasury bonds. As you can see, that we've had a pretty big up move in these things. We're having a little snapback rally after the big sell-off, and that big sell-off was really started. It took out the previous 3 weeks low by one tick, and when there was nothing there, the bonds, really started, to react, to the upside. So. We've already gone almost, let me see, we're already 2.5 points in just a day and a half off of the bottom, which tells us that we're going to most probably get ready to move to the upside a little bit more. There's going to be some pretty strong resistance at that 164.11 area in the bonds. That's going to be an area where we've had a lot of supply come into the market, but we're still almost a full handle away. Half a handle, the 164.14, so we're about a half a point away, from that occurring. So we'll watch, keep an eye on that. That's the main thing. Well, we got down so far in the S&P, we got down to 2083.25. I still think we're going to get somewhere around 2082. Maybe it's 2083. We'll see if that's the case. You'll have to sue me if it doesn't get there, but that's the way it is. Someday it's chicken salad. Someday it's better keep my nose to the grindstone here and not bring this up anymore. I wanted to put the Treasury note chart up, to let you folks take a look at it, and you'll see that it also has been. We broke down below this level that we were looking at, and now we're snapping back above it, which is normal. We basically completed a little ABCD pattern down there, a little bit below 129, and now we're rallying back into that 130 area that should bring, some pretty resistance. But the fact that we had very little rally over that last 8-day period usually means that there's a lot of selling and more is on the way. But we'll wait and see. Higher interest rates are coming, folks. If you'll notice that the Mr. Abe, who's the finance minister in Japan, soon to be replaced, I would guess. Basically they lowered the sales tax, actually what they did, they just took it out. 2.5% sales tax, and the market dropped the equivalent of 280 Dow points last night in the Nikkei. So they got some problems over there, but they will all work them out. It don't make any difference. Doesn't make any difference who's going to be elected. It's all going to work out in the end. That's the bottom line. That's my opinion. That's the way it's worked so far, but we'll have to wait and see. The question, people think I know more than I do about some of these things. All I'm doing is looking at patterns, folks. I swear to God, that's all I'm doing. If you look here, you'll see this is the pattern in the gold of, and that's, it just rallied, $22 off the bottom, which isn't very much. And it was a 382 retracement off the high, at 1265. So this thing is still, moving to the downside. We did have a nice 3-drive pattern there at 1200, as you can see. But my opinion is that we have to see if that's going to hold. And silver has not been able to rally at all. I mean, it's just, it looks weaker and weaker, as we go through some of these things. I'm trying to get Rich Anderson as a guest because we need to talk about the grain markets. We're starting to see some things in the grain market, like we saw in gold when it topped a month ago. We've seen a major top, I believe, in soybean meal that we discussed yesterday, up at that 410 level in July meal. It's selling way below 400 now. The 78% retracement in the November beans certainly held. And it looks like, it's down well over 30 cents from that high. So if it's going to hold, it should hold pretty close to where we are right now. And if it doesn't, then you've got to be able to look at possibility of some lower highs. I've got a note here to discuss iron ore. I happened to be watching Bloomberg really early this morning, and they had a gentleman on, the commodities expert from Goldman Sachs, and he said that the iron ore chart has been going down forever, and that it accelerated to the downside. And basically, that's what's happened. Unfortunately, it had a very good rally, and now it's going down to test that rally in possibly a Gartley format. Now, I don't trade iron ore. I never have. But I'm going to start watching it because maybe it's telling us that things are really turning around in China. And so the Chinese chart certainly doesn't look like that. But maybe the iron ore will be the key here because they are the biggest users and producers of iron ore. So we want to watch, to see how that's going on. And I think it's relatively important. Okay, all right. I think that's about it. I guess I should cut the show short. No, I was joking, Al. Just hang in there with me. Regarding the open interest in the gold and silver, we're still starting to see prices sell off and the open interest come off. That's a good sign. So all we'd like to see here is if we can get some really good support area and then be able to increase open interest. We'll see what's happening. But that has to wait. The gold, the number in the gold that I wanted gold to hold was the 1205 level. That was the key level from a perspective of, major Fibonacci support. I wanted to show you because we did go below that. We got down to, like we mentioned, 1199. And I think the next one would be, you're correct, around 1145. As you can see here, as Marshall just pointed out, that would be a 61% retracement of the whole thing. And if you were to draw a 20-minute line down from the 2014 high, you'd be looking at, as they say in Italy, a bada bing, a bada boom, and you'd be able to see it spot on. By the way, when I was going through all this stuff on the Egyptians and all the history and everything, it all came back to Italy. The Italians were in charge of everything. It's so easy to see geometrically that it's just really amazing that everything came from Italy. Not necessarily from Rome, but actually it was from the hometown of Leonardo da Vinci, Vinci, Italy. Okay, I'm bluffing, folks. I haven't got anything to say. Why no questions today? Why no questions? I need questions. Ask me some questions. I'll give you no answers. All right, let me see. I've only got a few minutes here. Give me a break here with the give me a break with the commercial here, so I can think of something to wind up the show at the end of the program here, and then we will look at what we've got here. Okay, don't have any more questions. It's time for where's the music? I'll tell you a story sometime when we will get back to the main thing, and we'll see. I think the yen is made a major bottom at 105, folks. It's got a really good chance, to go over. I don't know what AGU is, Tammy. I wish I did. Is that gold? I know AU is gold. AG is silver. All right, changing to bear into bear suit. Agrarium, I don't even know what that is. Agrarium, I don't know. That must be the stuff that you guys up in the Sierra Nevadas. Hey, I'm good at fertilizer. Are you kidding me? I've been on for an hour. You don't think I'm good at fertilizer? Yes, it does, Andrew.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we want to get back here to the stock market as we get ready to wrap up. I'm going to put this chart of the E-mini S&P up here show you these areas that we were looking at. Now we got down to 20.83 and a quarter. That's very close to the ABCD. That's within a point. Now I don't know if that's going to be it or not, but this is the first ABCD correction we've had since this market, took off back in on the 19th, and that 19th is a really key day. Hey, we got a caller in, Nick from Oklahoma City.
Hi,
How are you, my friend?
Larry. Good. I really enjoyed your stories about Kiev. That's part of former Soviet Union.
Of course. What can I do for you, my friend?
Valet. What do you think about that Brazilian company, speaking of iron ore and prospects of world growing or slowing down?
Well, I don't really follow that stock, but I am starting to look at iron ore, and I would stay away from it for a little while, at least till it shows more strength. I mean, it's not showing anything now, and Brazil's having a lot of problems with their currency and with their political things, so I would stay away from that. Find something else that's a little easier to look at.
Sounds good. All right. Have a good day.
Thank you for calling in, and I want to congratulate you folks on the fabulous basketball team you had this year. They made it very interesting.
That's right. Good. Yep.
All right. Thanks a lot, Nick.
Thank you. Bye.
Okay. All right. Let's wind it up here by looking at that S&P. We should have some pretty good support there at that 2082 area. We got to 2083 and a quarter. A little bounce from here. We'll see. This is going to tell us what's really going to happen, because if we come out of here really strong, folks, we got a shot at making a new high at 2134 in the S&P, and that's all it'll be. It'll be a marginal new high, just similar to 2000 in March the 25th of 2000, October the 7th of 2007, and again 7 years later later this year, in June, maybe. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.